Ho boy, it is time, guys. We have a jam-packed week coming up this week in the stock market. We have pretty much not all the big tech stocks, but a lot of the main big ones, except for Apple, set to report this week. We have Alphabet, we have Microsoft, Meta, Amazon, plus a bunch of other ones that we're going to break down in this video. So jam-packed video. If y'all find value, hit that like button. Make sure to subscribe. And guys, make sure to follow me on X as well, at Stocks Talk Stocks. That's linked down below. Let's get to 1,000 followers, man. Come on. We're at like 800 followers on there, so make sure to follow me, link down below. And with that being said, guys, cheers. Let's dive right into the video. So check it out. I'm sure you all saw on Friday the stock market did not do well at all. We had the Russell down 1.3%, NASDAQ down 1.5%, the S&P went down 1.2%, and we had the Dow Jones go down only, quote, only 0.9% as the VIX went up around 1.5%. Honestly, I would have thought the VIX would have went up more on Friday, but it's been going up a lot in the past couple of days leading up to Friday. And now the VIX, believe it or not, which honestly is not that hard to believe, but it's at a multi-month high as of now. You guys can see the VIX is at 2170 on the on the brink, at least in my opinion, of breaking out to the mid-20s here. And you can see the last time it was in where it's at now, 21.22, was back in, when was this? Pretty much in April, and the last time we were in the mid-high 20s on the VIX was back in March, which you guys probably remember what was going on in March, right? The regional banking crisis, which we're not going to talk about in this video, but that caused the VIX to see a massive spike to almost 31 points, and then it went down to 12 points, which was back in, when was that? The middle of September, about a month ago, which historically is so freaking low on the VIX, guys. It's nuts. And, of course, that was not sustainable. We were talking about that when the VIX was at 12, 13, 15. And here we are at 22, on the verge of probably going, in my opinion at least, to the mid-20s on the VIX. And you guys can see SPY is not looking so pretty right now. We're by a huge support at 420, which we're making lower highs into that support. Not the most bullish pattern, let's just say that. And if you guys take a look, if we break under 420, we have a wide open gap down to about 408, 410, 412. I mean, this thing could see more downside. We could get another leg down from that point. And on triple Q, we're testing 350 to 353 right now. And this point, which if it breaks this week, depending on earnings, who knows? I mean, again, Alphabet, Microsoft, Meta, Amazon, massive companies set to report. Let's say they don't do that well. They drag down the the NASDAQ, the stock market. We could be seeing triple Q go under 350, maybe start filling the gap to 340, 338. These things are totally in the cards, guys. And, well, I'm not saying they're guaranteed, but all I'm saying is look at the charts and be mindful of these support levels coming up, because we're testing them literally right now. And yes, we are pretty oversold, to play devil's advocate, heading into earnings week. So let's say Google crushes it, Microsoft crushes it, guidance is strong. We could get a little snapback for sure, but these are uncertain times, no doubt. Again, the VIX is elevated. We have a conflict going on right now, which we're not going to get into in this video. There's a lot going on, so there's so many variables moving. It's obviously hard to judge. Well, it's always hard to judge what happens next, but especially in times like these, right, guys? So let's just dive into the individual stocks. We'll break down the earnings estimates, EPS, revenue, all that good stuff. So the first one I want to look at, guys, is none other than Google, ticker symbol GOOG, or I guess officially named Alphabet, right? And Alphabet is pretty much, this along with Meta, these are the only two that have been doing quite well the past couple of weeks. You guys can see Google's chart is looking very good. Meta's looking really good, but something like Apple looks pretty weak the past couple of weeks. Same with Microsoft, right? Let me double check. Yeah, Microsoft's been falling the past couple of weeks, and I know for sure Amazon has as well, which we'll talk about here in a couple of minutes. So Google's actually been doing quite well. It's about, let's see, $15, I think, off the all-time highs. I think 150. Yeah, 152 is the all-time high on Google. Now we're at 136, and Google on Friday, by the way, went down about 2%. Not the best day, but still, guys, it is holding an uptrend. It's above the 180 SMA. This looks really really good here on the 4-hour chart. And we have earnings coming up on Tuesday, I believe. Of course, they're after the bell. They're always after the bell. Tuesday the 24th, we have Google set to report. So they're looking to do EPS of $1.44. And listen to this, guys. Last year they did $1.06. So year over year, their EPS is going to be growing substantially, and their revenue set to grow about 10% as well year over year, which is really impressive, guys, for just how big this company is. I mean, think about how massive Alphabet is as a company. They're growing still. It's crazy. I know. It is crazy. Last year they did $69 billion of revenue in the quarter, and this year they're projected to do almost $76 billion. At this point, it's only a matter of time before they're doing $100 billion. Maybe not every quarter, but they're going to hit that, in my opinion, at some point. Maybe not in the next year or two. Might take a couple years. Who the heck knows? But $100 billion revenue in a quarter, I think it's totally in the cards at some point for Google as they continue to expand globally. Obviously, they've dominated the market in a lot of the developed world, right? But think about all these other countries that are not as, let's say, proficient with Google, or they're not using Google as much, or Google hasn't really sunk its teeth into the market yet. Believe it or not, there's a lot of those markets left out there, and they're growing. I mean, there's so many different segments of the business that we're not going to get into in this video, but Google's crushing it. They're projected to grow 10%, and obviously a lot of that's probably priced in to the stock. And what could move the stock to all-time highs is, well, maybe not right after earnings, but what could get us there is maybe strong guidance, better than expected EPS revenue guidance. That could get us there for sure. So for this week, guys, I'm going to be watching it right around this moving average here. We are a little bit oversold here, quote, oversold. I mean, we're still crushing it over the past couple of weeks, but I guess over the past, let's say, 1 week or 10 days, Google is down about $6, so keep that in mind, down about 4.5%, so maybe a little snapback after earnings. I don't know. We'll see. But either way, Google, Tuesday after the bell, you got to watch it. We also have Microsoft also on Tuesday, guys, which this one is looking decent. I mean, yes, we have a golden cross. We're above the moving averages, but unlike Google, this is, down a good chunk, about $40 per share from the recent highs, or around 11.5%. So Microsoft is in correction territory right now, officially, with earnings coming up on Tuesday. So they're looking to do EPS of $2.65 versus $2.35 from last year, which that's a nice 30-cent pop from last year projected. And their revenue, guys, guess what, man? $54.5 billion is the projection versus last year's $49.6 billion. That's up projected 9.9% year over year. So think about that, guys. Think about that. These massive tech companies that you'd think, okay, we're in uncertain times right now. Well, maybe not as uncertain as we were in 2022, but you're like, maybe they're going to slow down a little bit. No, they're not, man. They're both growing. Both Google and Microsoft are projected to grow, by 10%, which is nice. And we have a big resistance coming up here on Microsoft's chart. You guys can see at about 338, 340. That was actually the high from the middle of September, about a month ago. So let me set my alert there. Mark is at or above 340. Let's do that now. If that point's able to break, maybe after earnings, all right, we could be doing or seeing a reversal back towards that recent high. But for now, kind of in this dead zone, I would call it, between 325, 340. I'm just going to be watching Microsoft. I'm not going to do anything crazy with it. And we'll see where it goes, after earnings. Again, I'm not a big earnings trader. I like to see how earnings look before I do hop on anything. And that's exactly what I'm going to do with these names that we're talking about in this video. And Meta's another one, guys. META is the ticker. This is down about $22 from the recent highs, or around, that's got to be like, 5%, if that. Actually, a little bit more, 6-7%. So not in correction territory, or what's it called? call it a bear market. Obviously, nowhere near a bear market. But Meta's pulled back a little bit, but it's still holding the uptrend, which is pretty evident, obvious here on this time frame. So they're on Wednesday, I believe. Let me double check. Yeah, Wednesday the 25th after the bell. They're looking to do EPS of $3.63 versus, let's see here, $1.64 from last year. So realize the comparables for Meta are just terrible, right? Last year the company was struggling for sure, and they've bounced back in a major way. So last year they did $1.64 EPS, and again they're looking to do $3.63 this quarter, so pretty much a double up and some there. So that's amazing, over 100% increase in EPS year over year, and revenue's looking to come in at $33.57 billion versus $27.71 billion. That's up 21% year over year. So yeah, man, Meta crushing it for sure. Probably, I mean, for sure the most. They're going to see the most revenue growth percentage-wise year over year out of the big tech names, which is awesome. And yeah, it's holding the uptrend. Maybe we get a little pop here above the 180 SMA, maybe even before earnings. We might see some hype around the stock. Totally possible, as we've seen that happen before. And Amazon here's the one that I'm really focusing on for maybe to add more to it, right? This is a stock that I was buying in the 90s, 85, 90, 95 range earlier this year. You guys remember this thing was at $88. That was the low from March, right? And it ran all the way to 146. I was buying it in this range, 85, 90, 95, under 100. I was buying it all day. It's just ran up so much. It's gotten away from us, and I don't like chasing individual stocks, especially when I'd argue that they're not overvalued. I don't think Amazon was overvalued at 145, but obviously I'd like to buy it more in the lower hundreds. So I'm watching this very closely. They're reporting on Thursday, I believe, right? Yeah, 26th, which is on Thursday after the bell. And I'm actually hoping, fingers crossed, this thing does dump down here. We have a descending triangle, which you guys can see on the 4-hour chart here. If they disappoint earnings, whatever happens, I have no idea. Maybe guidance sucks. We'll see. We might get this dump off. And if it starts to come down 120, preferably under 120, maybe 115, 10, in the $100 to $110 range, that's where I'm looking to add more to my position, right? Because I'm looking at this as a long-term hold. Again, I was buying in the $90, $95, $85 range, and I want to buy more. I want to continue adding both individual stocks, guys. I'm a little bit more cautious on where I'm buying. I'm not just averaging in at any old price all the time like you do, or like I do with index funds, right? Index funds, you just dollar cost average over time, no matter where it's at, right? All-time highs, all-time lows, in the middle of the range, whatever. You're just dollar cost averaging. That's the strategy. But with individual stocks, at least the way I do it, I nitpick, right? I'm very cautious on when I'm buying. And, it's not something that I do, or it's not like, oh, every week I have to buy the same stock over and over again, right? Because sometimes it's overvalued. Sometimes it's a little frothy, and you just got to nitpick. At least that's kind of what I do. Let me know your thoughts in the comments down below. But listen to this. EPS for Amazon's coming in projected at 58 cents versus 28 cents from last year. And revenue, guys, the estimate is $141.44 billion versus $127.1 billion from last year, up 11.3% projected year over year. Absolutely unbelievable, guys. These companies are growing like crazy. And am I surprised? Can I say I'm surprised? Not really, guys. Not really, to be honest. So keep your eyes on that descending triangle on Amazon. Hopefully it goes lower so I can add more. You guys might be adding more too. I don't know. And let's talk about 3 more stocks. But actually, before we do that, don't forget to get up to 16 stocks for Mumu. Use that link down below, or just go to stocksurfest.com/Mumu. Check out all the details on there, guys. Depending on how much money you deposit, I think if you deposit at least $100, you get 5 stocks right off the bat, and I think you get another free share of SoFi stock now. They changed the promo, I think, it started yesterday, guys. And if you also deposit, I think, at least $1,000, you get 10 more stocks. Check out all the details linked down below. Again, each of those could be valued up to $2,000. And keep in mind that is an affiliate link. It helps out the channel. Full disclosure, I appreciate you guys as always. So yeah, shameless Mumu plug down below. Get your stocks, guys. And now let's talk about Snapchat, which is notoriously one that just gets destroyed every time they report, at least as of late, guys. I mean, look, this thing in the last 2 earnings reports has gotten destroyed. And I'm not talking 5%, 10%. I'm talking like a 30% drop. I mean, look, 2 quarters ago, back in April, the stock was at $11, $10.50 before earnings, and shortly after it got to $7.85. That was roughly a 30% drop, and the one before that, or after that, the most recent earnings report, Snapchat went from $13.85 roughly before earnings. Actually, let's say $13.30 the day before earnings, or the day of earnings, and the stock went all the way down to about $10 freaking dollars, guys. 25%. That's actually not as bad, but still, it's over 20% drop in a day. That is horrendous. So they're looking to do EPS of -4 cents versus the 8-cent from last year. So EPS is getting worse for Snapchat, and revenue is going to be coming in projected at $1.11 billion versus $1.14 billion from last year, down 2.4% year over year. So Snap's going to be flat on revenue, pretty much down a little bit, and their EPS is going to suffer tremendously by the looks of it. And one thing worth mentioning, though, is this thing is slowly starting to reverse, believe it or not. We were under the moving averages for a good couple of months. We had a death cross on the 4-hour chart, but now, based on the last couple of days of trading, it looks like here we had a huge pop on the 16th of this month. What the heck happened? I'm actually not sure. Let's see here, guys. What happened? Am I missing something? Either way, whatever. It did start seeing a pop about a week ago, which did get it above the highs from the last couple of days, and it actually got it to a multi-week high. Now we have a golden cross. So will this green continue? I am not too confident, to be honest, based on the last 2 earnings reports, but we'll see, guys. Never say never. I guess last earnings report, it makes sense why it dumped down. It pretty much doubled up heading into the last earnings report, so that was actually a massive bar to beat there for Snapchat. The earnings were subpar, and it was already up again pretty much, it doubled up. So earnings weren't good. The stock dropped like a rock, but now it's kind of a separate, or not a separate, but a different scenario, right? We've dumped massively now heading into earnings. What if they actually do pretty well? I don't know. And this is exactly why I don't trade around earnings or buy and hold through earnings and gamble, because we don't freaking know. Let's wait. Let's see what the earnings look like, guidance, all that good stuff. And the last 2 names here, guys, number one is UPS, which, man, this stock has suffered. Let me tell you that. The stock was at, I think, $300 at one point recently, or maybe not. That was FedEx. I'm confusing these. But either way, yeah, it was at $233, pretty close. That was about a year and a half ago, a little over a year and a half ago. And now UPS is at $150, and they're looking to do EPS of $1.52 versus $2.99 from last year. That's really bad, guys. They're pretty much down 50% year over year projected on EPS, and revenues projected to come in at $21.45 billion versus the $24.32 billion from last year, down about 11.8, 12% roughly year over year. So EPS for this company, guys, and revenue, just get ready. It's not looking pretty, and their stock's been downtrending. I think they're on Wednesday, right? Wednesday or Thursday in the morning is when they're set to report. So keep your eyes on that, guys, which it's going to be interesting, guys. And the last stock, ladies and gentlemen, is none other than Ford. And by the way, I'm probably going to do a part 2 because there's literally 10 more stocks we could talk about, but this video would just be too long. We're already probably pushing 20 minutes now. So make sure to subscribe and, follow along for more, because we're going to probably do a part 2 and a bunch more content this upcoming week. So check it out. We have Ford set to report, I believe, on Thursday. Let me double check that, though. Thursday after the bell. And this stock has also gotten destroyed and now testing a massive support from the last couple of months, really from the entire year, at about $11. And honestly, I would not be surprised if this thing were to fall under $11. It looks like it keeps testing it, at least it has been over the past couple of years, and it just keeps bouncing off of it. But if you notice here, we do have a clear descending triangle on the 3-year chart, do we not? Each time we bounce off of $11, we make a lower high, right? Lower high, lower high, lower high. So eventually, by the looks of it, man, this could be coming under 11, and it could be going to that $8, $7.50, $8 range, which was the low from I think the pandemic, right? Yeah, so keep your eyes on Ford technically at about $11. That's a big spot. So they're looking to do 46 cents EPS versus 30 cents from last year. So that's nice, a 16-cent pop there. And revenue's looking to come in at $41.06 billion versus $36.25 billion from last year, up 13.3% year over year. Pretty good, guys. Pretty good if you ask me. And this could be setting up quite interestingly. If we do start falling under 11, I might be eyeing up Ford in the $8 to $9 range. I'm not sure how long you guys have been watching me, but I've said for a while now, a couple years, I'd love to own Ford, but not in the teens, that's for sure, not in the teens. But if it does get to that $7, $8 range, I will most likely nibble a little bit. We'll see. I might change my mind depending on how the economic landscape looks like. I don't want to own an automaker. Can I freaking talk? In a recession, guys. But, you know, if it looks interesting enough, the numbers look decent, I might pick up some shares in that range. But, yeah, man, with that being said, I'm going to wrap up the video. If you enjoyed it, hit that like button. Make sure to subscribe for part 2. And don't forget to follow me on X, guys, at Stas Talk Stocks. Link down below, and I'll see you later.